Welcome back, everyone. We're skipping the usual agenda today because I want to jump straight into one of the absolute most dramatic, high stakes transformations in all of financial history. We're looking at the completely wild rise of Bank of America. I mean, think about it. How does a tiny, humble startup, run by the son of Italian immigrants, transform into this literal global capitalist leviathan? It's an incredible story packed with ambition, total crises, and sheer absolute survival. So grab your focus and let's get right into it. Okay, let's dive into this incredibly profound quote right off the bat. Banking is a game of confidence, a game of loans. We're actually going to use this at the thematic bookend for our entire explainer today. Because, when you strip away all the massive skyscrapers, the crazy complex financial instruments, and the billions of dollars, the entire banking industry literally relies on just one fragile human emotion: trust. If you have confidence, well, you have a bank. If you lose it, the whole house of cards just comes crashing down. Keep that in the back of your mind as we look at our founder's journey. Now, let's look at the relentless drive of our founder, Amedeo Peter Giannini. His early life was, well, it was anything but easy. At just 7 years old, his father was tragically shot dead during a labor dispute. But psychologists have a term for what happened next: post-traumatic growth. Giannini matured incredibly fast. By age 14, he's expertly handling all the logistics for his family's grocery business. By 21, he takes it over completely, driving massive profits. And then, at the absolute height of his success at age 31, he does the unthinkable. He retires from the grocery biz to conquer real estate and banking. He saw that traditional banks were completely neglecting San Francisco's hardworking Italian immigrants. So what does he do? He founds the Bank of Italy, specifically to serve the working class. But then, absolute disaster strikes. The infamous April 1906 San Francisco earthquake levels the city. Raging fires are threatening to consume literally everything. Now, while other bankers are panicking and locking their vaults, Giannini and his stepfather do something incredible. They load all of their bank's cash, gold, and silver onto wagons, hide the entire fortune under crates of fruit and vegetables, and smuggle it to safety. But the really genius part, while other banks stayed closed, terrified to lend a dime, Giannini sets up a makeshift desk out on Washington Street. He just starts handing out unsecured loans to devastated citizens based entirely on a handshake, personal trust. He took a massive catastrophe and turned it into the ultimate branding opportunity, permanently cementing his bank as the most trustworthy institution around. To build a true empire, though, Giannini knew he had to break into New York. But that meant going to war with the king of Wall Street. This was a true clash of titans. On one side, you have Giannini's operation, West Coast, built for the working class, pioneering the whole branch banking model. On the other side, J.P. Morgan Jr., better known as Jack Morgan. He's the East Coast elite, sitting on a billion-dollar corporate trust he inherited from his notoriously ruthless father. This is a guy who literally survived an assassination attempt by wrestling the gunman to the ground. Morgan saw Giannini's expansion into New York as a full-on invasion, and he launched a brutal smear campaign just to crush Giannini's bank stocks. Now, what's really interesting about this slide is how the 1929 stock market crash completely flipped the board. The crash caused some severe internal boardroom drama at Transamerica, which was Giannini's holding company, and Morgan capitalized on that weakness to actually oust Giannini from his own board. But, Giannini was relentless. He strikes back. Step 1, he forms the Associated Transamerica stockholders. Step 2, he rallies his West Coast shareholders, banking entirely on his pristine, personal character to counter the ruthless Wall Street stereotype. Step 3, he wins a massive proxy fight and fires every single Morgan loyalist. When he returned to California, thousands of people cheered for him in the streets. Local papers literally compared him to Julius Caesar returning to Rome. No way, right? So Giannini steers his bank through the Great Depression and World War II, officially becoming Bank of America. By 1945, it was the largest commercial bank in the entire world. When Giannini died in 1949, the bank he built held over $6 billion in assets and had more than 500 branches. But look at this number: $489,278. That was the shockingly modest value of his personal estate when he passed away. Giannini had donated half his wealth to education and just lived simply. He truly built an empire for the common people, not to enrich himself. It's kind of unheard of today, isn't it? After Giannini's passing, the booming post-war era definitely called for new leadership. Enter S. Clark Bees, who fundamentally revolutionized how we spend money. See that number? 2 million? In 1959, Bank of America launched the Bank AmeriCard, which is what we all know today as the modern credit card, and they distributed it to 2 million Californian families. Just like that, ordinary customers had incredibly easy access to cash-free purchases. This totally supercharged the California economy and ballooned the bank's assets to over $12 billion by 1961. A real game changer. But, well, good times never last forever, do they? As the bank transitioned into the turbulent 1970s, a really dangerous corporate decay started setting in. Let's take a look at this innovation gap. Bank of America, under CEO Tom Clausen, essentially became this complacent, giant, slow-moving bureaucratic organization. Meanwhile, their fierce rival over at Citibank, led by this privileged risk-taker Walter Wriston, they saw the future. Wriston gambled $50 million on a massive network of electronic ATMs. By the time Bank of America realized the threat and scrambled to get their own machines up and running, it was just too late. Citibank surpassed them as the top commercial bank in the U.S. And to make matters worse, Clausen used completely legal but very aggressive accounting tactics to mark up long-held assets. This artificially boosted earnings so he could retire gracefully while handing a massive hidden mess right to his successor. That successor was Sam Armacost. And the mess he inherited quickly spiraled into a barrage of catastrophic crises. Throughout the 1980s, the bank was getting hit from all sides. We're talking the Third World Debt Crisis, the Penn Square Bank failure, and crushing economic pressure from crazy high interest rates. But the most shocking blow was the Enemy C scheme. Bank of America acted as the escrow agent for a mortgage company promising risk-free returns. Unfortunately, it was entirely built on fraudulent appraisals and literally non-existent properties. The bank lost $95 million. People describe this event as the bank's Pearl Harbor. It was a massive hit that absolutely shattered their myth of impregnability and severely damaged their reputation. So sensing blood in the water, the corporate predators started circling. Sandy Weill, a notorious Wall Street takeover artist, attempted a hostile merger, promising he could turn the struggling bank around. To stop this from happening, the board ousted Armacost and brought former CEO A.W. Clausen completely out of retirement. And Clausen deployed what's known in the corporate world as a poison pill. It's basically a defensive strategy to prevent hostile takeovers by flooding the market with new shares. This dilutes the potential acquirer's ownership percentage and makes the takeover prohibitively expensive. To survive, Clausen also had to sell off massive assets, like the famous Charles Schwab brokerage. But it worked. He successfully fended off Weill and kept the bank independent. Let's fast forward through the euphoric expansion of the 1990s, where banks were merging into massive superpowers and blurring the lines between commercial and investment banking, and go directly into the manic panic of the 2008 financial crisis. The collapse of Lehman Brothers sent shockwaves globally, and Bank of America caught the absolute brunt of it. Their acquisition of Countrywide Financial suddenly burdened them with a massive mountain of toxic mortgage assets. Then, to try and stabilize the sector, they were practically forced to acquire a collapsing Merrill Lynch. Ultimately, their survival was only possible through a massive, massive intervention, a $45 billion government bailout that kept this behemoth afloat while the entire global economy was teetering on the brink. So the absolutely crucial point here is, after surviving 2008, the bank was battered. CEO Ken Lewis was out, and Brian Moynihan took the reins. Moynihan realized something very important. They were right back to where Amedeo Giannini started. Banking is a game of confidence. The public and the markets had completely lost faith. Moynihan needed a massive vote of confidence, and he found it in legendary investor Warren Buffett. Buffett poured $5 billion into Bank of America. That massive $5 billion seal of approval worked like magic. The stock soared, confidence returned, and Moynihan began the incredibly grueling work of stabilizing the balance sheet and shedding those risky assets. Which brings us right to today. In 2024, Bank of America remains an incredibly dominant, profitable institution. However, the irony of building a massive, bureaucratic empire is pretty clear. Operating a leviathan of this size flawlessly is nearly impossible. Today, the bank faces ongoing consumer challenges that really stem from its sheer bureaucratic weight. Reports highlight issues with unauthorized accounts, misleading promotional practices, withheld credit card rewards, excessive fees, and some pretty significant fines for regulatory noncompliance. It's just the incredibly complex reality of managing an institution of this unimaginable scale. And that leaves us with this final provocative thought. Has the largest bank in the world kept its founder's promise? Think about it. Amedeo Giannini set out to build a trusted, inclusive institution to help marginalized immigrants, a bank based entirely on human connection and a simple handshake. Today, it's a global titan that literally shapes economies. but sometimes struggles with the very consumers it was built to protect. So, what really is the ultimate cost of corporate empire building? Can a modern Leviathan ever operate with the soul of a 1906 makeshift desk? Definitely something to think about next time you swipe your card. Thanks for joining me for this explainer, and we'll catch you on the next deep dive.